Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking back in on FCX for copper and then AKS and X for steel. So FCX has been a full-on bear ever since we broke this tightening range where we had our low, lower high, higher low, tight, and the clear break occurred here on December 13th. As soon as we broke the higher low pattern on the daily, we lost the middle Bollinger Band on the same day. And then from there, it's been nothing but lower highs every day. And an all-out dump, look at the big volume on Friday, and the close at the low of the day indicates further downside is likely coming. We have filled the gaps to the downside here. There are more gaps all the way down here to 1216. And we are now heading towards 1350 support. You can see we've built a base at 1350. It would be very bearish if we were to break that level. So the bears are in full control 4 days in a row now. And again, it was a very clear break, as we can see the higher low pattern on the daily time frame breaking as well, shifting that trend. The weekly time frame, bearish reversal candlestick on last week, 2 weeks ago, was the heads up that the trend was changing, and all we needed was confirmation, and we got that in a huge way with increasing bear volume and a red Maribozu. You cannot see a more bearish candlestick on the weekly chart. So the bears are back in control for the short term. We'll see. We could still pull all the way back to 1056 here, 1050, and still be forming higher lows on the long-term trend compared to where we came from at the start of 2016. So keep that in mind. The longer-term weekly trend is absolutely still in the bulls' favor, but this daily chart indicates the bears are in control and very strong in the short term. AKS and steel are still strong as well. We had higher highs on AKS. AKS is more bullish than X for a couple reasons on the shorter term. Most notably from Wednesday to Thursday, we maintained higher lows where X formed a lower low on Thursday compared to Wednesday. We also had higher highs on Friday for AKS where X did not. So it's a clear lower high, however, from the high that we formed earlier in December. And now if we were to pull back and lose the middle Bollinger Band and break the low of this consolidation, 967, that would be the red flag for the short-term bulls. We're still well above that level, but it is a bearish reversal candlestick on the daily time frame after 3 days of bounce. And if we lose that 967 level, we can expect further consolidation to come. The weekly time frame, big bearish reversal, inverted hammer was not confirmed this week, but it's another bearish reversal candlestick, a doji at the top of an uptrend. And a red week this coming week would confirm the pullback is coming, just like it already has happened on FCX. And I know they're in different sectors, but definitely worth comparing as the breakout occurred over similar times. FCX certainly pulling back ahead, and we'll see if the steel names follow suit. So X, you can see that little lower low from Wednesday to Thursday, unable to hit a higher high on Friday. And the key level here is 3378 and the middle Bollinger Band support. If we break that 3378 level, it's a lower high and a lower low, and we will break that middle Bollinger Band, indicating further consolidation is coming. Weekly time frame for X, bearish reversal, inverted hammer. Last week was confirmed this week with a red week, but we do have a double low of 33.78. So we still have that key support level. And if we look back, we can see 33.78 and that level here, 33.78. So that's where that double bottom on the weekly comes from. Break of 33.78, and the bears are going to take control in the short term. So steel names still holding on to a bullish uptrend, but close to following FCX, which is 4 days ahead of them, already forming a very clear bearish downtrend after losing the higher low pattern and the middle Bollinger Band support. We'll see if the steel names follow suit this coming week. I appreciate you watching. Have a great rest of your weekend.